All right, everyone, here we are with ticker symbol SNDL, Sundial Growers Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So before we go ahead and jump into this chart and really dive into what's going on here, I want to announce, I'm going to actually put the link down below. I have actually created my own website. There's an intro video there that you guys should check out. And also here on the YouTube channel, I did a short video kind of showing you guys an overview of the whole entire website and what it entails. I look forward to seeing your guys' comments on your thoughts on the website down below. And also I look forward to seeing your guys' comments down below about the chart. But I did want to go ahead and take a moment to announce that. Now, all of you guys that commented down below yesterday in the comment section talking about this could be upwards to $1 in the near future, and some people were also saying there could be a slight pullback due to the fact that profit taking was going to start, and also it could probably run up slightly, get close to $1, and then pull back. All of those were some great analysis and also some great ways of looking at the chart, because it definitely did that. I mean, it had a pullback regardless. It got closer to the 50-day moving average. I had stated that it needed to continue to pull away from the resistance level and from the 50-day moving average to pull further up. Now, it did break through the highest point up here at 86 cents, but it barely managed to stay above it. It got close to 94. From that point forward, it started to fall. So 95 cents, if you want to round it up, that is probably the most important number right now for the bulls to test new highs. Now, since this ran up for almost a whole entire 3 days, obviously there was going to be some type of profit taking. I mean, it was bound to happen. Now, we didn't think it was going to happen so soon, but now we need to really watch how Sndl reacts in the next coming days, because this had a quick pullback here. The bears did dominate even though it broke through resistance, but they're getting close to the 50-day moving average. Right now, the one slight thing that gives the bulls leverage to continue momentum and bring themselves up is the fact that they're above the 50-day moving average. So let's look at this closely. So I'm going to move our support to its new location and also our resistance to its new location based off the chart's last couple of hours. So here we are standing at this point, and this is our new resistance and our new support. The highest point before this fell, like I said, was 95 cents, and it started to fall. The lowest point it reached was 58.13. I highly recommend to all investors to pay very close attention to how this stock is reacting if it breaks through 58.13. Super important. Now, your next point of reference, if that gets broken through, is down here at this support of 46 cents. So you're going to have that window of time to see if the bears are dominating or are the bulls trying to reappear, because there could be a tug of war within that area. If 46 cents does get broken through, this could be on its way down to newer lows and newer support levels. But before even looking back at 46 cents, you're going to want to watch how this is reacting at 58. I must be honest, and I must point this out. If 58 is broken through, we are pretty deep into bearish territory, because the 50-day moving average is up here at 65.61 to be exact, but it jumps around. It doesn't let me get to the hundreds or thousands place, but 65.61 is our 50-day moving average, and if we're below that, we're already in bearish territory. And if it breaks through this support, it's breaking through the lowest point that it reached in the day, and it's going to get deeper into bearish territory. Now, if the bulls do appear before breaking through 58.13 or after breaking through it, that's a good sign of momentum that's being built on the bullish side of things. But it's going to be much harder for the bulls to bring themselves back up into bullish territory, because when we're below the 50-day moving average and we break through support, or we're about to, and we're still in bearish territory, it gets a lot harder for the bulls to get back up, because not only do they have to break through the 50-day moving average, but they need to break through resistance, and that resistance is 73.56. I need every single investor to be aware of this and pay close attention to this number. 73.56 is the most important resistance level for the bulls to continue this momentum and stay above the 50-day moving average. I need every single investor to be aware of this. 73.56 needs to be broken through. I need to emphasize this, and I want you guys to be aware of this. If they don't break through this, just slightly touching it and kind of hanging out sideways, the 50-day moving average is going to cross right through the price, end up above it, and this will end up in bearish territory on its way down to newer lows because it's giving leverage to the bears, especially if it's already in bearish territory. So I need every single investor to be aware of the fact that this point of reference here, 73.56, needs to be broken through by the bulls, turn into a support so that the bulls can go ahead and turn that into a support and do that staircase effect to reach newer highs and newer resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and in that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. As you see here on the graph, these circles are the dates that the pumps have happened, and I use them as examples to show you guys how much the stocks have risen and the S&P 500 index rose on those dates. And the reason why it's rising is due to the fact that the Federal Reserve is pumping the markets. On these dates, the charts and the dates speak for themselves, as we can see it here, and I break it down into more detail in the video. But just to summarize it, on these dates, the S&P 500 rises, and there's individual ticker symbols rising up with it, anywhere from 30 cents to $3 per share. I know it may not seem like a lot, but per share that does add up, and these individual ticker symbols are giving you back profits. These are profits, and like I always say, profits are profits. Whether it's $1 put into the market and you get back $2, you've put in an initial investment and you got back more than what you started with. That's what it's all about. And also in the video, I go into further detail showing you guys these dates and showing you how much it rose. Like, for example, this was one of the last pump dates, and the lowest point that it reached was down here at 35.11, and the highest point reached was 35.57. That's like a 40-point jump. And here we're seeing the same thing. It went down to 35.88, and it rose up to about, I'd say, let's see, this is all still in the same day. It rose up to about a total amount of 36.23. When you do the math, that's almost a 40 to 50 point jump, and there's individual ticker symbols rising up with this. Now, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to inform every single investor on the great news, on the opportunity to maximize profits and minimize losses. You have to do your due diligence and research, but these charts and the dates speak for themselves. I mean, this was probably one of the largest jumps that I've seen in the last couple of pumps, and it was down here at 33.02, and it rose up to about 33.88. That was an 80-point jump. There was probably ticker symbols rising up more than $3 per share on those dates. And even on these dates, there's individual ticker symbols rising more than $3 per share. Check it out, see for yourselves, and my best advice is look for ticker symbols that may be resembling the behavior of the S&P 500 index, and you'll be able to go ahead and give it a shot. Check it out. Again, I'm not there to tell you to buy, sell, or hold anything in particular. I'm not there to guarantee you profits. I'm just here to go ahead and share the information along with every single viewer and investor. The video should be popping up soon. If you haven't seen it already, pop up. There is the link down below in the description. Thank you guys so much for watching, and let's make some money.